There is one aspect of the world of cryptocurrency that I have come to realize: the extent to which the different factions disagree on specific issues. For instance, if you are discussing a particular cryptocurrency endeavor, you can expect to have a discussion that is rather divided. On one side of the discussion, you will have people who are really supportive of the project, while on the other side, you will have people who are labeling it as a scam and expressing their disapproval of various aspects of it. However, I think that all of us would be able to agree on one thing, which is the idea that at this moment, everyone is likely considering the fact that the cryptocurrency cycle has been utterly dreadful. For example, you may make the argument that, oh yeah, XRP has performed exceptionally well. Its value is over $2. You are aware that Bitcoin is currently at $95,000. It did reach a high point of $126,000, which is fantastic. Nevertheless, let us be honest with one another here. The majority of ancient coins did not achieve a new high. They did not go through the process of price discovery. To this day, we have not witnessed a run such to that of 2021 or even 2017, 2018. This is the point at which we really begin to take a closer look at what is happening with cryptocurrency, such as what is occurring that is so distinctive about this particular situation. We were at a lower phase, which I believe was about 16, exactly like we look at fear and greed when we were 17 years old. The market cap is at approximately 3.23 trillion, which is close to the fear and greed point. It has recently dropped to a low of around 318 trillion. It was a little bit lower, I believe. What is happening in this moment? After that, you take a peek at the headlines, don't you? One example would be if we were to have a professional administration that deals with cryptocurrency. That level of proficiency is so high that on July 14th, it was classified as being poor in the cryptocurrency industry, due to the fact that we were observing a large number of significant announcements being made with regard to rules. We observed the passage of the Genius Act. The date of the announcement is today, July 18th. A fact sheet is attached to the document in which President Donald J. Trump signs the Genius Act into law. This was a major, significant event. Again, this is due to the fact that, as you are aware, this is the first president to officially be in favor of cryptocurrency. There are so many significant developments taking on in the world of cryptocurrency, as we have observed. And in addition to that, if we move over here, I will close this, redefines the functions of cryptocurrency during the first 100 days. Over 180 oh-so-very well-done pivots from the Biden administration. Once again, we were observing significant changes in the markets. Even at this moment, it is common knowledge that the SEC is in favor of cryptocurrency. It is so professional that if we were to go back only a couple of days, it would actually be a month ago at this point. So the chair of the SEC, Paul Atkins, has outlined a pro-innovation path for the regulation of crypto and tokenization. However, if we go back just a week or so, Paul Atkins made a significant announcement about tokens and how, as you know, they ought to all be traded in the same manner as stocks. Once more, the issue that needs to be addressed is what is happening here. There is an abundance of positive stories for us to share. There are so many things going on right now. Adoption by institutions is on the rise. However, when we examine the cryptocurrency sector, it appears as though we are seeing a period of declining prices. It is an utterly horrible feeling. Many individuals are posing the inquiry, how is it even possible for us to enter a bear market at this point in time when the majority of this sector has scarcely done anything? One could even go as far as to say that the majority of the antique coin market has not yet reached a new peak. As a result, the question becomes, what is really happening in this situation? I have came across a fantastic post from the Kibisi letter, and it so happens that there is a standalone cryptocurrency sell-off at the moment. Futures on the United States stock market have just been available for trading, and they are absolutely unaffected by the cryptocurrency fall that occurred over the weekend. Despite the fact that cryptocurrency has decreased in value by $100 billion since last Friday, futures for the United States stock market are still positive. Gold has just surpassed the $4,100 per ounce mark and is now trading over that price point, while yields are also increasing. Our opinion is further substantiated by the isolated nature of the crypto slump, which is currently around 25%. This is a cryptocurrency bear market that is predicated on leverage and liquidation. After the market structure has been reestablished, a bottom is formed. As we investigate this matter further, we are uncovering what is going on in the world of cryptocurrency. Cryptocurrency has lost $1.1 trillion in market capitalization over the course of the past 41 days, which comes out to an average of $27 billion
lost each day. The cryptocurrency market capitalization is now 10% lower than the previous level. On October 18th, or really on October 10th, my apologies, there was a liquidation event that broke records amounting to $19 billion. This is a strategic decision that has been made. We should allow ourselves to provide an explanation. And of course, here is the graphic that depicts the moment when crypto approaches a market cap of $4.3 trillion. The most significant liquidation event in the history of cryptocurrency, along with Trump's announcement of a 100% tax on China. And then, of course, fast forward to approximately the beginning of November, the end of October. America will be the leading nation in the field of cryptocurrency, according to Trump. In the span of 41 days, cryptocurrency wiped out $1.1 trillion. Up to this point, the decrease has been peculiar for a single significant reason. There have not been many adverse developments in the cryptocurrency market on the fundamental side. The President of the United States, Donald Trump, stated only a few days ago that his top priority is for the United States to be number one in the field of cryptocurrency. However, when compared to 1 month ago, Bitcoin has fallen by a margin of 25%. Yes, indeed. This is just another significant thing that we are continuously observing and hearing from the Trump administration, which is, hey, cryptocurrency is our top priority. We would like the crypto to take the lead. Even Scott Bessent has been talking about stablecoins, including how they strengthen the dollar and how they are 100% endorsing stablecoins in the United States. In light of the overwhelming support and the tremendous amount of confidence that has been placed in cryptocurrency, the question that has to be addressed is, why is the price action continuing to be so overwhelmingly unfavorable? In addition to this, it seems to be a period of decline in terms of both structure and machinery. The beginning of this situation was marked by institutional withdrawals that occurred in the middle to end of October. What an unexpected and pleasant surprise. The big money is beginning to sell, and it is already causing alarm once more. During the first week of November, withdrawals of cryptocurrency funds reached a total of $1.2 billion. The difficulty is that these outflows have resulted in excessive levels of borrowing. Crypto leverage is unlike any other. Speculators regularly assume positions that are leveraged at 20x, 50x, or even 100x. Your position would be liquidated if it were to play out at any point below a 2% movement at 100 times leverage. This has a domino effect when there are millions of traders who are utilizing leverage. For this reason, it is necessary to continue asserting that leverage trades are a terrible method of attempting to earn money in this area. Utilizing leverage is simply preposterous unless you have a great deal of experience under your belt and are considered a veteran in the trading industry. Particularly in a market like this one, in which the majority of these exchanges are not subject to regulation, they would have the ability to view your positions and they might even target them. Making an attempt to earn money in this manner is simply an appalling approach. And once more, we observe a liquidation cascade in which a large number of leveraged traders are liquidated when there is a significant decline in this market. It begins to become exaggerated as a result, and it ultimately leads to prices falling. As a consequence of this, a rush in cryptocurrency liquidations occurs whenever these abrupt downturns take place. On October 10th, the $19.2 billion liquidation spree resulted in the first ever daily candlestick for Bitcoin that reached a price of $20,000. It is the opinion of experts that the market appears to be extremely sensitive due to the excessive amounts of leverage that have been employed. In the past 16 days alone, we have witnessed 3 separate occasions in which the amount of liquidations exceeded $1 billion. Liquidations of more than $500 million on a daily basis have become a regular occurrence, especially during times of low traffic. These outcomes lead to dramatic fluctuations in the cryptocurrency market. And it moves in both directions. In addition, it provides an explanation for the abrupt changes in attitude. The cryptocurrency Fear and Greed Index has officially dropped to the number 10. This is an intense, overwhelming feeling of dread. As of right moment, the lowest seen is tied for the year 2025, even though Bitcoin has increased by a total of 25% since the bottom of April. Leverage is being used to increase changes in the way that investors feel. Are you still unconvinced? Since the liquidation took place on October 10th, you should have a look at the chart that compares gold to Bitcoin. Bitcoin and gold have a strong link in their movements for a period of 12 months or more. The assets of the safe haven gold has exceeded the performance of Bitcoin by a margin of 25 percentage points since the beginning of October. Outside of Bitcoin, the pattern is even more noticeable. Have you seen how Ether has officially decreased by 8.5% throughout the course of the year? Ether has experienced a significant decline of 35%. since the 6th of October. This is well outside the bounds of bear market area, despite the fact that there has been a more extensive rebound in all hazardous assets across the board. As a result, when you take a step back and consider the bigger picture, it appears